you. And look who's there in our studio. I'm actually pinching myself. The Samir Arora. Hello, sir. When Samir, when Samir bhai is in the studio, it's always has to be band, baja. No barat, but band, baja.
Or khana.
And khana.
So आजकल कम हो गया खाना.
Because we only get hot water.
I will do something. I will do something. अभी बाद में दिखाएंगे. पहले आप खिलाएंगे. आप लोग को दिखाते हैं आपको पहले. चलिए. Samir Arora in the studio. Let's welcome in style, the Punjabi style. Let's welcome him. Saying you still look the same because of
I've lost 7 kg. आप क्या बात कर रहे हो?
चलो आज हाफ केजी बढ़ाते हैं. चलो आज आपको आज आधा किलो बढ़ाते हैं. Yes, the vada pav for you.
Vada pav for you. There's lots of lovely snacks, so go for it today. We only get water. Samir comes to the studio and vada pav comes out.
ये तो मैं नहीं खा रहा, ये मैं खा सकता हूँ.
अच्छा चलो.
But that's healthier, by
the
way.
Avan is speaking Hindi.
I thought it brown cookie or something.
No, it's all Indian delicacies. I will tell you, yeah. We've got a lot of stuff.
I think it's thali piece.
ऐसे मेरी image क्यों बनाई हुई है आप लोगों ने?
अरे भाई ये तो बढ़िया है.
Shocking. That's a good image to have.
Yeah. But no mirch in the markets right now, looks like it, Nikunj.
See, Avan, if Swat speaking Hindi now.
Yes, I am. That's what Samir Arora does.
चलो पंजाबी तड़का लगाते हैं. पहले बात करें या पहले खाना खाएं?
First, let's talk.
Let's talk. So what are we talking?
Whatever you like. Open-ended.
Open-ended. So आज stocks नहीं बात करते. We'll talk about in general mutual fund आ रहा है. When is it coming?
So we have applied for the flexi cap, and if it comes on as per regular this thing, then hopefully end of October, before the Shera.
So Diwali is the big launch for
it should
mutual
close
funds.
before Diwali.
Well,
because the auspicious period, I believe, is the क्या होता है Navami.
Yes.
Navami. So Navratri or Navami, whatever. Yeah. So in that range, sometime.
How will this fund be different
from
the ones which currently are there? Apart from the fact that you are there.
Well, actually, the thing is that if you look at historical performance, they are very different, so there must be something different. But the difference in philosophy is very high, which is that we are basically not willing to make trade-offs in stocks. I think the whole industry does trade-off. What does that mean? That if a stock is very good, has good history, doesn't matter, we'll pay a very high valuation. Or if a stock is poor history and everybody knows it's poor more or less. It's not that only we have discovered, but they'll say it is very cheap and discounted. So effectively you're doing a trade-off between different factors which are supposed to help a fund do well or a stock do well. Sorry. We don't do trade-offs because we have realized that so many stocks do well that there is no need to make a trade-off. So you could be rejected on one factor. So the end result of that is our at least past performance is materially different from the crowd, but our cost of error is low because we are rejecting even for a single excuse which might be to somebody else too small, but we have figured out that so many stocks do well that if suppose I think that a stock will do badly and it ends up doing well, what goes of my father? Because so many stocks are doing well, ki chalo one which I thought will not do well ended up doing well.
Was that the rationale behind ITC when you first bought into it?
No, ITC though we bought, so that's a positive. We're talking about the ones we don't buy thinking that you will do badly and you end up doing well. So according to us, all the times, by the way, we show this in one of our presentations that nearly no fund, nearly ever, has got even the performance which the 150th stock of the index has.
So there's no FOMO, you're saying?
Correct, because there's so many of them. Yeah. Imagine that if you just rank last year's rank, the 150th stock was from the index, and you're not talking about some non-index stock, was up 16%. Which fund, general diversified fund, was up 16%? None. In the 18 years, I have only managed to get the 150th stock performance 3-4 times for the full fund. And really nobody ever gets it, or once in a while somebody gets it. So that means so many stocks do well. So if so many stocks do well, why bother about FOMO? You could use that for Tata Motor if you so desired. That it doesn't matter, you are not going up alone. So let me choose my factors which I like, and maybe 10 stocks I thought will not do well. So in theory, there's 140 more that are going up and I can choose from that, but I don't need to compromise. I think that is the big picture difference.
But since you talked about it being a flexi cap fund, is there a bias that you have right now, given that mid caps are the ones which are at an all-time high and maybe some value in large caps right now?
We don't know that, the fund manager will decide, but broadly in a big picture sense, if we look at our history, it'll be 50 to 60% large cap. Because we like the big fellows, which is the banks. And
which are not doing anything.
No,
right
that
now.
is good. That is, you are storing something for the future. Means you have to keep chiseling away. So the good thing is now mid caps.
They're charging.
They are charging or waiting, like in a relay, you're waiting for your turn. There is no way that if you believe that flows are coming in from domestics and from foreigners, that one day plus minus a few months it won't happen.
Most of the banks are quite proud of their retail growth. Even PSU banks are now saying that we want to move towards the retail growth. But if I look at the construct of the economy, whichever alphabet you want to use, the economy can be divided in two parts. Urban India are doing very well, semi-urban and rural India under stress. So my question is that if retail franchises or banks are doing well, then how come that is not captured in the real on-ground demand?
Because you yourself just now said that the rural is not doing well and the urban is doing well. And mostly these loans are going to urban guys or to the salaried guys or to the guys who are earning more. And also we are not saying, and nobody is saying that this is forever, that the rural is gone forever, then then elections would be decided on these things. So we are talking right now in a big picture sense that if you look at the fact that the banking sector is strong and doing well and hasn't done anything for at least now the calendar year and maybe even some part of last year, and it's a big part of the market, and you are getting foreign flows, and you can buy things like HDFC Bank at 3-year-old prices. It is the easiest thing for the world to do. And in whatever way you say it, if somebody is overweight or underweight, they will buy maybe 25% financials.
Yes.
So if you think foreigners are coming in, then 25% they are buying, and actually for the tech and others they are making decisions, yes, no, or for consumer they are making whether it's too high valued, low valued compared to their own. Financials is the easiest for them also to buy.
Yeah.
And from the domestic side, if we are saying domestic flows will be strong, you are supposed to deposit 10% with HDFC Bank every time you raise $1. You can't. These technical things will get sorted out, that mutual funds had too much, or they crossed 10, or that the FIIs, including me, bought more thinking that MSCI mein aayega full weight and it didn't come. So all those extra thodi speculation had to be unwound. But broadly, the concept will remain.
But since you did talk about elections, when will the market start building in the pre-election narrative?
See, I don't know exactly, but first of all, we don't know the date. Now people are saying
Next
it's now.
year.
नहीं अभी तो आया ना कि November, December में कर देंगे, which Mamata Banerjee and a few others have said.
No, but that
वो नहीं
is
होगा
also
शायद.
elective.
So then the issue will be कि if the state elections are not in favor of BJP, then will the market immediately say that these two things are different, which they are.
Yeah.
But will everybody say that let me hold back a little bit? So actually next 4-5 months I think are aimed
play out.
at making us invest our mutual fund properly.
I don't know if these goodies came via Zomato, but I know that is a stock that you'll look at very closely. But recently there have been so many IPOs hitting the market, but I believe that you've said that they're very overpriced. What's the view?
So on Zomato, may I say that you were the first guys we told when it was 52. Yes. The thing is, when it is falling every day, to come and say that we own it or we've just bought it, rather than now when everybody is buying it.
Are you selling it now then?
No, we are not selling now because अब वो ठीक है, वो Blinkit की story बना रहे हैं. अब चलने दे सकते हैं क्योंकि it is in proper this thing and they are doing well. So on the new IPO now, I haven't seen all of them, but the ones which are fellows, so broadly they are like that drone fellow and all. It's too much.
Why there's so many block deals happening? Just so many block deals, promoters after promoters.
Beyond anything
Beyond
that we
anything. What does that mean?
But this is showing the appetite of the foreign investor on the other side, because the seller is also mostly foreign in these.
No, even promoters are selling this.
But PE guys mostly, let's say. And the other side is the domestic, and they feel that you won't be able to buy it on the screen because they're slightly liquid or the size of the Indian industry has become so big. We never had it in our alliance days when I was the biggest mutual fund manager in the private space in equities. So it is just the size. But main thing is that you are supposed to have this kind of in every market. Because for example, if we just take for granted, if somebody says GDP of India will grow 7%, let's say, we don't question, we say, yeah, good. But that 7% GDP growth implies so many things. That roads will be made, that new investors will come, that capital will be raised. So 7% kahan se aayega? But when that happens, we take it as if it's over and above the fact that we had already, without questioning, accepted the 7%. It's like the IT guys. If an IT guy comes and says that I will grow 8%, we say very good. Then next day he announces an order. You're supposed to have that order, otherwise you're not growing 7%. Yeah. But we take these as an additional piece of good news. So the fact that more investors are coming, more demat accounts are opening, I don't think is supposed to change the returns of the market. It is needed as it becomes bigger and bigger and bigger.
And IT then, you just touched upon it, glass half full, glass half empty, because there have been these order wins, the deal ramp ups, and yes, we have seen that spate of underperformance. Has that played out?
I think underperformance is ended, but because we don't have it, we are not getting frustrated because of these Paytms and Zomatos and landmarks or whatever else is working for us. If it pained us, we will worry. Right now, let it be. It's not worth the effort of selling something because we have to sell something to buy.
So it's not one of the first who got out of IT completely. I mean, for Samir to go IT
so
zero
initially that worked. Now it is neither hurting nor affecting at an index level, but it's still underperforming all these slightly different stocks. But so therefore, it's right now we are not thinking of it so actively just because we are doing well and everybody is doing well even if they don't have it.
You're still resisting the temptation. You can take
this I will have afterwards.
Yeah, this smell, I'm dying to dig in after.
I can have this one. I can just show it to your audience.
We can take a break.
That's bread.
Bread
That's the healthy one.
Healthy, mostly healthy.
Okay, let's split the IT space into two. The traditional business.
And the newer guys.
Newer
means
the so-called the SaaS guys, the new age tech. When I say new age, the specialized IT companies. You go to MapMyIndia, go to RateGain. These are specialized.
So those we have, by the way. We have KPIT also and we have RateGain also.
Okay.
But we don't have these regular TCS, Infi and HCL Tech and all that.
But within that, Samir, I can divide that traditional model into two parts. The old business and the new business. The old business is something which will grow at 7-8%. And the new business which will get challenged because of AI. So old business is a function of what happens to the US economy, and US economy is making a comeback. Beginning of the year and now, the outlook for US macro has changed. So will that incrementally change the way how IT cycle will move?
The thing is, I don't think those company things have changed. Simple thing is, look at the hiring of these fellows. They are not hiring. They themselves don't believe. They are not honoring their school commitments or whatever. So they are showing to you.
Cash-rich balance sheets.
So then why are they acting like this? Why are they negotiating salaries of a starting guy by saying give another exam? I don't have to give names of all these fellows. I mean, that is also otherwise. What does it show about their own confidence?
Helios is hiring what, right?
Helios is hiring more than Wipro is hiring because they're net.
That's why I asked you this.
But what are the Contra bets in the market? Is there anything Contra right now or undervalued?
My number one holding is Contra, HDFC Bank. Which hasn't done anything.
That's also there.
Consensus has become Contra. Can you imagine HDFC Bank being called a Contra call? What times have we living in? The darling of the market has become a Contra bet.
We met them, they have come to Singapore. I think they are very good. Let's see.
What is the consensus bet then?
Consensus bet might be ICICI then in that case.
What about Geo Financials?
Geo Financials, if it went to some 180, I'll buy. See, we just made a thumb rule that for the Reliance shares, we can give them, say, 10-20% discount. And for the cash, you give them, say, 2.5, doesn't matter. And that is the price. But you can't give a premium for the Reliance share. That Reliance itself is a good company, and then you give another premium for holding it. And it
was always part of the balance sheet. Earlier, for the main Reliance treasury was always part of the balance sheet.
Not that, just simply... So it is because who knows beyond that? But it will do well is one part, but it will hurt many others is another part. But
is there a frenzy, Samir, in defense railways? Or the orders are justifying what the stock prices are showcasing?
I don't like railways or I don't like anything where government is a big customer. But defense we own because defense there is no choice also. And you might, because there are only 3-4 of these companies, you are not really winning on L1, you are basically being assigned these orders. So, you might get paid on time because the government views you as basically their arm.
Yeah.
So if you have to make the next thing, But the railway guys getting orders and all, I have this simple thumb rule. Okay, let me ask you. So my big picture thing is that in the end, many of these guys don't get paid on time, so therefore they are hurt. But according to me, the guys who get paid on time get doubly hurt. Why?
I don't know.
Because then they bet up and take even bigger bets and then they don't get paid on time. In the end, they are not getting paid on time. If you are lucky if you don't get paid on time the first time and go away and find something else to do. So I
Samir, you will say all these things and move back to Singapore. We have to live here.
No, my problem is that all the things where I have done badly in the last 15-20 years were where something went wrong in their order, in the payment, in their winning an arbitration, in something. So now I say there is no need. 150 stocks do well. Let 10 of these also do well.
Yeah.
And it's fine to
We
be.
still 130. How many the 35? We want only 35-40 stocks.
So, this has been a new learning for me.
That?
So I'm sharing with you that how to look at investment through time frames. It's been new for me. And the data what was shared with me was that 90% of average Indian who's participating in the stock market has a time frame for less than 1 year.
Okay.
5% is between 1 year to 3 years.
Oh, this was that SEBI data.
I mean, someone shared with me.
But usme the only angle is that because the real action started after 16-17 on the terms of the SIPs and all. So if you see newer data, it might not be what somebody told me in reply to that.
No, fair enough. SIPs have really started. So SIP is somebody who's a direct investor, but technically is not actively trading on a daily basis. So let's look at the mindset of somebody who's active.
Like a ETF
Like
investor.
an ETF or for example
Like
an HNI investor. They have time frame for less than 1 year, 90% of the folks. 5% folks are in for 1 to 3 years and rarely like 2-3% of Indians are beyond 5. So let's categorize that.
This is investing into a stock or into
Stock.
a stock. How much?
Broadly, that's how the activity patterns brokerages are telling us, right? They look at demand and look at delivery.
Mutual. Correct.
Right, that's how it
Could
is.
be.
So when you are investing, वो 1 साल वाला हटा देते हैं, sub 1 year, you will not be there. You would be in 1 to 3 and you will be in 5 year plus.
No. So my theory is that the long term is very difficult to see.
Okay.
And the long term, the number of stocks that do well are very limited.
In long term, the number
Long
of
term
stocks
means because the same fellow, many people do well over 1 to 3 year period, but then they are not able to sustain. So somebody else starts doing well or a new sector. So that we all believe, and you also believe, I think, that private sector banks have created a lot of wealth. Only 2 stocks, HDFC Bank, Kotak Bank. There was Global Trust Bank and Times Bank and Bank of Punjab and Centurion Bank and RBL Bank and Yes Bank and God knows all private sector banks. And they've done very badly, Bandhan also has not done super well. But looking at the older guys, so the point is that the long term is very difficult to see, and you have very low ability to see the long term separately anyway. Because if people say that we know that this is such an obvious thing, do we know that when Steve Jobs died, his biggest investment was not in Apple, it was in Disney shares because he had got it for selling Pixar. And Disney shares yesterday hit a 8-year low. So in 2011, why didn't Steve Jobs sell all his Disney which he got and convert them to Apple? Because he didn't know. You know that Bill Gates owns less than some 15-20 billion of Microsoft out of his 150 billion net worth. But
Buffett doesn't own Microsoft.
But the
Bill
biggest
Gates'
stock
best
is वो था ही. But वो तो कहेगा चलो technology I don't own, because nobody knows. But what you know is over a 1 to 3, 4 year period. So you look at the long term as a series of 1 to 3, 4 years. If it does well, you will hold it. If it doesn't do well, have a nice day and you move, because that visibility is there. And a simple answer of that is Warren Buffett. One second, Warren Buffett. He owns Apple, but 1 year before Apple, he bought 10 billion of IBM. Why doesn't he hold it?
He sold out.
Because it didn't do well.
Yeah.
Mr. Jhunjhunwala must have bought 50 stocks. 6 worked. And some others may have also worked in between.
But
6 worked and he kept
well.
them. So it's the same thing with our fund, that you will buy with a 1 to 3 year view. And the ones which work, so now I say I own HDFC Bank from beginning, but I don't even remember. But 100% I would have bought 3 of these other banks, but sold them after a year. Or so this idea of going in, I am owning a 20-year stock. No,
So
is
what's
an
looking
outcome.
good from a 1 year perspective and what's looking good from a 3 year
No,
perspective?
1 year, 3 year का मतलब है कि मेरा मतलब not literally 1 year because that
हाँ.
broadly medium, short, whatever you want
No,
to call.
don't deviate now. You answer
No,
her question.
हाँ तो खाना भी खिला रहे हैं भाई आज तो
घुमा रहा था इधर उधर घुमा रहा था.
Yeah.
So
Not possible. We would have come back to it. Yeah.
So 1 to 3 years, I like what I was telling you, that the advantage of looking at a 1 to 3 year at a time is that you will not like highly valued stocks, because a highly valued stock you justify by saying, since I'm going to hold it for 20 years now, it's discounting, over 20 years, the fact that I paid extra premium doesn't matter. But if you look at it 1 to 3 year, you will have to in theory assume that after 2.5, 3 years, you might have to sell. So P का आप वो नहीं कर सकते हो कि अभी 50 है उस वक्त 50 रहेगा. Sorry, that अभी मैंने 70 ले लिया, doesn't matter because after 20 years it will become 30 like one of your other guests does all the time. So many guests. So the point is, whatever we are owning, like for example today we say we are buying this K economy stocks, which means rich man stocks, like in India Landmark Motors or something, or
Vedant Fashion.
हाँ और वो चलो वो middle का है. Landmark is really, और वहाँ पे US में आप या मतलब globally में ले लो Louis Vuitton. So that doesn't mean that 1 year later or 2 years later some rural will not improve. But when it improves, up 5 stocks out of 40 you change. What is the big deal? That's the point.
You said Geo Financial at about 180. Anything else that you're looking at that when it hits this price?
Because Geo is very easy to calculate like this. Normally life is not so straightforward. This is like an SOTP of shares and a business. That's why it is so clean.
Where do you think there is strong storytelling in this market? You know, brokerages, they call you every day, this is a great idea, this is the big picture. Where do you think the storytelling is very strong?
Storytelling has really failed in the last 2 years. And fortunately, because we don't believe too much in these stories. One story was that there is no limit to valuation of a good company. I mostly shorted all of them. Even now I'm short half of them in another fund. All these 70, 80p growing at 10, 12% and not this year. For 10 years growing at 10%. But because they are very good quality companies. The other storytelling which has quite decently failed and rightly so is chemical companies trading at 40 and 50 times as if they are some levers and Colgates of this world. Although they are also doing badly. The levers and Colgates. But this idea that, you know, because the reason other than SRF we missed all these chemical companies is because we are not used to giving 40 multiple for some fellow making. So all those, at least in 2 years have done quite.
You think urban consumption is storytelling or there is merit in it?
Urban consumption, give examples of names.
For example, hotels, cars,
so
watches.
Hotels we own, but hotels is not storytelling, but it might be near the end.
Okay.
Yeah.
What about the other luxury categories?
I can give you some examples because I'm staying right now in a hotel and what the rate.
Oh, I thought you had a house in Bombay.
No, I live in Trident.
Okay.
So the hotel rates are, you know, cricket ke liye they will work for some time, but after that it's okay.
You know, we were discussing Aisha.
But it's not storytelling, but it's like an, it's like hit the peak. I own both, so I'm not sold even one share, but I'm just saying big picture. I think 6 months here or there.
You know, we were discussing yesterday the Cricket World Cup aa raha hai. And imagine if India, if it reaches semi-final, if it's in final, if they win the match, what kind of excitement we will see. The amount of pizzas which would be ordered, what will happen to hotel rates, what will happen to the liquor sales. That could be a nice little theme, right?
That's what I'm saying. But I'm saying the hotel and all will be all in one quarter, and then suddenly there will be a massive. So this quarter, of course, because we G20 next week khatam ho raha hai, and then the cricket will be there. But and also it's peak season, you know, that December.
Diwali Dussehra.
But uske baad kya hoga ki baat ho rahi hai. Ye quarter to chalo will be good.
Yeah, like
Did you manage the World Cup tickets?
I'm
sure you're coming back in October.
I'll be here. But you know, because we have to sell our mutual fund, go here, there, let's see how much time we will have. The only thing we said is we won't, because mostly our matches will be on Sundays.
Yeah.
So we won't travel on Sunday to go and for a meeting on Monday. But now 2 months are a bit different work.
So we'll have to catch you more in India next time.
That time I have 2 months I'll be here.
So let's block our next interview with you. And you're also a very avid reader. So anything interesting you've read?
Yes, right now I'm reading a book which twice in 3 days, not now, but about 15-20 days ago was recommended by Elon Musk. It's called Destined for War.
You are reading Elon Musk's recommendation.
Oh, that recommendation has to gel with you also. Okay. So it is Destined for War.
Because he recommends a lot of things also.
So anyway, this book appealed to, but book is very good.
Yeah.
It is that how China and US basically are
Yeah.
destined for war. It's called the Thucydides trap, something long
Yeah,
story.
can America and China escape the Thucydides
Yeah,
trap?
Thucydides trap. So in that, forget about the story, but the big picture is that reigning power and ruling power nearly always have a war.
Okay.
So they have identified 16 such things.
So you
situations.
give us a synopsis
And
on Twitter,
In
maybe.
11 cases there was war.
No magic trick before you disappear from the studio?
Magic trick is you give money to the mutual fund, boom, performance.
That's a good one.
Good pitch.
All right, Samir, pleasure as always having you with us in our studios. Cameras will be off you, so enjoy your vada pav and all of the other snacks.
You're not telling anybody. You're not calling your wife and telling her. What Samir ate today?
Okay, that's pretty enlightening. So good to have you in our studios. That's a view coming in. Lots of stock recommendations as well as market view. But I think we need to